let me ask you something that sounds wrong at first. Who do you think usually takes bigger financial risks? The entrepreneur who quit their job to start a business, or the employee with a stable salary, benefits, and a long resume? Most people answer instantly, the entrepreneur. But when you look closely at real numbers, real behavior, and real outcomes, something strange appears. In many cases, the person with the stable job is quietly taking larger, more dangerous financial risks without even realizing it. Not because they're careless, but because stability creates a powerful illusion, and illusions change how smart people think. Picture a completely ordinary situation. You're 28. You live in the US, the UK, or somewhere in Western Europe. You have a degree. You work for a known company. Your paycheck arrives every 2 weeks. Health insurance is deducted automatically. Retirement contributions happen in the background. Your manager schedules meetings 3 months ahead. Nothing feels uncertain. So you do what almost everyone around you does. You rent a slightly nicer apartment. Then you finance a car. Then you upgrade the phone. Then you book vacations 6 months in advance. None of these feel risky because your income feels guaranteed. And that's where the illusion begins. Here's the quiet psychological shift that happens with stable income. When money arrives consistently, the brain stops treating income as something that can disappear. It becomes part of your identity. You don't say, "I earn money for now." You say, "I earn money." Future income starts to feel almost as real as cash already in your account. So you make decisions based on money you haven't earned yet. A 5-year car loan, a 30-year mortgage, a lifestyle that requires uninterrupted income. From the outside, this looks responsible. From a risk perspective, it's aggressive. Because now, one variable controls everything: your job. Engineers use a term called single-point failure. It means one component fails and the entire system collapses. Many employees unknowingly build their entire financial life around a single point. One employer, one paycheck, one industry, one income stream. Now compare this with how entrepreneurs are often forced to think. An entrepreneur usually assumes income is unstable, so they don't build life assuming certainty. They delay commitments. They keep costs flexible. They expect dry months. They plan for income gaps. Ironically, the person with less predictable income often builds a more resilient financial structure, while the stable employee builds a fragile one, but feels safe doing it. Let's run simple math. Imagine 2 people earning the same amount, $70,000 a year. Person A, stable employee. Mortgage sized at the maximum the bank allows. Car payment locked for 6 years. Fixed monthly expenses eat 65 to 70% of take-home pay. Emergency fund covers maybe 2 to 3 months. They feel safe because the job feels safe. Person B, income uncertain worker. Smaller living space, lower fixed expenses, cash buffer covering 9 to 12 months, willingness to reduce lifestyle if income drops. Person A looks more successful. Person B looks more cautious. But risk isn't about appearance. Risk is about what happens when reality changes. Layoffs don't ask permission. Industries don't decline gradually. Health issues don't schedule themselves. When income stops, commitments don't. This isn't about intelligence. In fact, educated people are often more vulnerable to the stability illusion. Why? Because they trust systems. They trust contracts. They trust institutions. They trust linear career paths. And most of the time, that trust is rewarded. Until it isn't. The danger isn't losing a job. The danger is designing a life that cannot survive a job loss. That's not conservatism. That's hidden leverage. Financially intelligent people don't ask, "How stable is my job?" They ask, "How fragile is my lifestyle?" They don't treat income as guaranteed, even when it's reliable. They treat fixed costs as the real risk. They understand something subtle. Stability is not about where money comes from. It's about how little damage happens when it stops. That's it. No secret strategies, no aggressive investing tricks, just structure. Once you see this, something changes. You stop asking for the biggest loan you qualify for. You stop maximizing lifestyle based on peak income. You stop assuming the future will cooperate. Not because you're pessimistic, but because you're realistic. You realize that real financial safety doesn't feel exciting, it feels boring. Flexible expenses, time buffers, lower dependency on certainty. Entrepreneurs are forced into this mindset early. Employees often discover it late. This isn't a warning to quit your job, and it's not praise for entrepreneurship. A stable job can be a powerful tool, but only if you don't confuse income stability with financial safety. The illusion isn't the paycheck. The illusion is believing tomorrow's paycheck belongs to you already. Once you separate those two ideas, your decisions change, quietly, logically, and without drama. If this perspective helped you see stability a little more clearly, you might enjoy the other ideas on this channel. You can subscribe if you want, and that's all.